The epic EV race is just getting started. But who's gonna be the winner? Speaking in March as he unveiled the Model Y, Tesla CEO Musk quote, "Our goal all along has been to try to get the rest of the car industry to go electric. Musk will get his wish soon as the winner is determined." Well, with growing competitors on the field, is Tesla on the verge of taking over the EV market in the coming years? We'll be discussing it here, so keep watching. Well. Are you on the lookout for a new ride? Or seeking any info about automobiles? You're at the right spot. With thousands of vehicles in inventory, OBSOLETE is here to help make car research easier for you by comparing expert car reviews and recommendations. Stay with us. Getting started with a bit of toes and fro's in the EV market. On the outskirts of Brussels, where the city meets the suburbs, the future of Germany's most successful automaker is shaping up inside a peculiar sort of car factory. There isn't any sign of exhaust pipes, transmissions, or gasoline tanks at this location. Even there aren't any spark plugs, radiators, or manifolds to speak of. The Volkswagen Group facility, on the other hand, has batteries packed to the rafters. 36 shoebox-sized battery modules, each with a dozen lithium-ion cells, are bundled into 7-foot-long electric battery packs and slung beneath the floor of each sport utility vehicle manufactured here. The e-tron, Volkswagen's luxury Audi brand's first electric SUV, can travel 400 kilometers or nearly 250 miles on a single battery cycle and can be recharged in as little as half an hour. The styling is conventional, the interior is luxurious, and the ride is nearly silent. The e-tron SUV has just one job for Volkswagen: like to prove that an automaker that has relied almost entirely on the internal combustion engine since it was founded 82 years ago can produce electric vehicles people want to buy, and policymakers will embrace as they cast around for ways to tackle the climate crisis. Success implies that Volkswagen will outperform rivals, notably Tesla, in electric car sales and fend off new challenging threats from China and Silicon Valley. Failure could signal the beginning of the end for a firm with 665,000 employees and annual revenue of $265 billion. Volkswagen is not alone. Established automakers all over the world are appending their business models with the expectation of adapting to a new future in which electricity replaces gasoline and diesel. Factories are being revamped to produce electric vehicles, and automakers are snatching up every battery they can get their hands on. Because of the exorbitant expense of creating electric vehicles, some companies are forced to find partners, while others are becoming acquisition targets. Because of the necessity to meet rigorous emissions requirements in China and Europe, executives are paying far more attention to policies being implemented in Beijing or Brussels than to what rivals are creating in Detroit or Wolfsburg, Volkswagen's homeland. The German conglomerate, which also owns Porsche, Bugatti, Skoda, Lamborghini, and Seat, is responding with a drastic makeover unprecedented since World War II. The business wants to spend 30 billion euros or $34 billion over the next 5 years to develop an electric or hybrid version of every vehicle in its lineup, and it expects to launch 70 new electric vehicles by 2028. It wants 4 out of every 10 cars it sells to be electric by the end of 2030, a mass market play that hinges on the success of a new line of vehicles known as the ID. Volkswagen is investing billions of dollars in retrofitting factories from Germany to China to produce vehicles based on its modular electric car production platform, or MEB. The company has also indicated that it'll use some of the proceeds from the sale of gasoline-powered vehicles to manufacture its own batteries and establish charging networks. The initiatives are costly. However, the magnitude of investment made by Volkswagen and its competitors, as well as the tough emission limits set by regulators, indicate that there is no turning back. All of this raises a significant question: whether Tesla is going to maintain its lead in the global race of EV production. Now let's take a look at the current and estimated sales stats of Tesla. In 2020, the business sold approximately 500,000 electric vehicles, implying that the baseline for 2021 is much higher than 750,000. So far, the company has sold over 627,000 units and is on the course to sell over 900,000 units this year. Given the huge demand and ongoing expansion of manufacturing capacity, it could be even higher. Moreover, Tesla anticipates that long-term average annual growth in vehicle deliveries will be around 50%. Here we must see, can Tesla maintain its incredible momentum in 2022 after a massive 2021? It's been a big year for Tesla. The stock has surged nearly 60% higher year to date, and that's on top of the growth stock's 743% gain last year. Investors have cheered the company's soaring profits fueled by strong sales growth and margin expansion. However, how will things fare for the company in 2022? An analysis of the company's current momentum as well as some of the catalysts in place for next year indicates that the electric car maker's vehicle deliveries may continue to rise substantially in 2022. A 50% increase in vehicle deliveries next year is not out of the question. Now I'll tell you how Tesla could grow its deliveries around 50% next year and onwards. And first, wrapping up 2021 with significant momentum. A quick scan of Tesla's sales growth in recent quarters reveals that an estimate for 50% growth in electric car deliveries next year isn't overly ambitious. Consider that Tesla's deliveries climbed by 121% and 73% year-over-year in the second and third quarters of 2021 respectively. While Tesla's fourth quarter deliveries are unknown, sustaining third quarter deliveries of over 241,000 would represent a 34% increase. However, Tesla management recently stated that the business attained an annualized production run rate of over 1 million cars towards the end of quarter 3, indicating that a 34% growth rate in quarter 4 is likely overly conservative. As a result of this, 250,000 units may be delivered during the quarter. Tesla's strong sales momentum in the third quarter and presumably in the fourth as well set the company well for ongoing significant year-over-year growth rates in early 2022. Another strong factor is a robust demand. A strong advantage Tesla has is that it has extraordinarily high levels of demand. In the company's third quarter earnings call, management stated that demand continues to outstrip supply. Furthermore, in its third quarter update, the company stated that it feels there is a structural shift emerging in which demand for electric vehicles is increasing. We believe that the more vehicles we have on the road, the more Tesla owners will be able to spread the word about the benefits of EVs, said Tesla. Let's talk about the new production units. With no sign of demand slowing, the company's continued growth next year is highly dependent on Tesla's ability to increase vehicle production rates. Fortunately, Tesla has 2 new factories it has been building out all year that are supposed to begin producing the automaker's high-volume Model Y vehicle before the end of the year. In fact, the start of production at Tesla's new factory in Berlin, Germany could be just days away. Tesla is also almost ready to begin production at a new factory in Austin, Texas. These 2 new factories could eventually double the automaker's manufacturing capacity. Of course, the typical S-curve of scaling production rates of new automobile factories means that production rates will probably be very slow at first. But with production expected to come online at the end of 2021, the 2 factories could be producing vehicles at substantial volumes by the middle of 2022. And what if we also consider the big wildcard? COVID, of course, has thrown some major curveballs at companies with sprawling global supply chains and high levels of dependence on trucking companies and human labor for product distribution. The lessons of 2020 and 2021 suggest that investors should brace themselves for the unknown in 2022 as well. Supply chain disruptions or other unexpected challenges may potentially make things difficult for Tesla next year, weighing on sales. Despite these potential hurdles, the EV maker appears to be on track for a 50% increase in vehicle deliveries next year. Even if Tesla doesn't quite achieve this, actual results may not be far off. Let's address a big concern here. Is Tesla going to lose market share to new competitors at some point? As we all know, Tesla has been the biggest electric vehicle powerhouse in the US by far, but rivals are starting to eat away at its shares of the market as appetite for electric cars explodes. Volkswagen, Ford, and General Motors are banking big on a future dominated by battery-powered automobiles, and they're pouring billions into electrification projects right now. However, Tesla may be losing market share, but its sales in the EV space more broadly are growing dramatically. According to the analysts, Tesla will remain dominant for some years, but rivals could overtake it in EV sales over the next decade. Volkswagen is going to sell more electric vehicles than Tesla by 2025, but Tesla will continue to make a larger profit on the vehicles it sells. On the concluding note, nobody really knows how deep the market is right now, but if you take Tesla out of the picture, the market may drop to less than 1% EVs. Well, that's it for now, guys. See you in our next video with another informative and interesting topic. So, who's going to win the EV market race? Will Tesla be able to maintain its top ranking? And which competitor could be a real threat for Tesla? Do share your thoughts with us in the comments below. And guys, be sure to subscribe and check out more of your favorite content here. Hit the bell icon to receive timely notifications about the latest videos. Also, have a look at this other video, Tesla full self-driving are getting insane. If you have reached out in this video so far, we would like to give you a huge thanks.